With prices soaring and financial uncertainty looming, it's time to unravel the mysteries behind high inflation and discover strategies to thrive in this challenging landscape. From understanding the concept of inflation and its impact on the economy, to learning from Warren Buffett's investment philosophy, we delve into investing during inflationary periods. Discover the power of diversification, pricing power, dividend-paying stocks, and bonds as essential tools to navigate these challenging times. Familiarizing with the phenomenon of high inflation. Have you noticed prices skyrocketing and money seemingly vanishing into thin air? We're witnessing the effects of a sneaky little troublemaker called inflation. So, what exactly is inflation? You head to your favorite coffee shop, armed with a crisp $10 bill, ready to treat yourself to that delicious cup of joe. Suddenly, you find yourself shelling out an extra $5 for that same cup of coffee. It is an example of inflation happening. But it's not just about pricier lattes. Inflation affects the entire economy. It erodes the purchasing power of money, making goods and services more expensive over time. That means your hard-earned cash used to stretch farther than it did. Now, let's get to the heart of the matter. Why does inflation rear its head? There are a few culprits. One of the leading causes is an increase in the money supply. When there's more money circulating in the economy, it tends to push prices higher. Rising production costs, increased demand, and even global events like the Russian invasion of Ukraine can contribute to inflation. And the consequences? They can be impactful. Inflation erodes the value of savings, reduces the purchasing power of consumers, and can even disrupt businesses and investments. In times of high inflation, investors like you and I must adapt our strategies. Traditional investment approaches may not cut it when prices are spiraling upward. We need to be a step ahead of the game. Inflation is no walk in the park. It demands our attention and a willingness to adapt. So, gear up and get ready to explore investment strategies that can help us navigate these challenging times. Warren Buffett's investment philosophy. Warren Buffett, renowned for his investment expertise, possesses unique qualities that distinguish him from others. Above all, Buffett firmly believes in the long-term value investing approach. He avoids pursuing quick profits or being swayed by flashy trends. Instead, he patiently searches for undervalued assets, like discovering a hidden treasure chest amidst a sea of skeptics and pessimists. Buffett's extraordinary success is not a result of mere luck. He has a track record that can make even the most experienced investors envious. Regardless of market conditions, he navigates the unpredictable waves of the market with finesse. So, how does he achieve this feat? It's a remarkable combination of instinct, discipline, and an exceptional ability to see beyond the noise. Buffett remains true to his principles, even when the market attempts to entice him with its whimsical fluctuations. Daily market ups and downs do not sway his resolve. Instead, he focuses on the long-term game. His unwavering determination is admirable, as he remains steadfast while others panic and flee. It's akin to riding a roller coaster with nerves of steel, knowing that the ultimate destination is the pot of gold at the end of the rainbow. Buffett's investment philosophy shines like a beacon of wisdom in a chaotic world. It reminds us to keep our gaze fixed on the future and seek value when others succumb to fear. It's about recognizing opportunities others overlook and staying resolute in our convictions. Therefore, as we navigate the turbulent market waters, let's draw inspiration from Warren Buffett's principles. Let's embrace the power of long-term value investing, uncover hidden gems, and chart our path to success. Ultimately, it's not about trying to time the market perfectly, but about the time we spend there. Investing strategies for high inflation. When inflation is running wild, you need investments to outrun it, like a gazelle evading a hungry lion. One option is to dive into the world of tangible assets. When prices soar, real estate, commodities, and precious metals tend to hold their value. They're like anchors, grounding your portfolio in the stormy seas of inflation. We must recognize the power of pricing. When prices are spiraling upward, you want to bet on companies that can raise their prices and protect their profits. These companies possess something magical called pricing power. They're like superheroes battling the forces of inflation, shielding your investments from its harmful effects. Dividends. Who doesn't significantly love a steady income stream when inflation rises? Picture yourself as a shareholder receiving regular payouts from companies that keep giving, regardless of the inflation monster lurking around. Dividend-paying stocks can be your trusty sidekicks, providing stability and a buffer against the eroding effects of rising prices. Now, let's address the fixed income realm. Bonds and inflation-protected securities can be your secret weapons in the fight against inflation. They offer a safety net, shielding your investments from the ravages of rising prices. These financial instruments act as a fortress, preserving the value of your hard-earned money when the world around you seems to be in chaos. So, when high inflation knocks on your door, don't panic. Arm yourself with these savvy investment strategies. Embrace tangible assets, seek out companies with pricing power and dividend-paying stocks, and fortify your portfolio with bonds and inflation-protected securities. Together, we can weather the storm and emerge victorious, with our investments thriving amidst the chaos. The key is to adapt, stay nimble, and seize the opportunities that high inflation presents. Ensure a diversified investment portfolio. I bet you've heard the phrase, "Don't put all your eggs in one basket." Well, when it comes to investments, Warren Buffett couldn't agree more. It's like having a safety net that catches you when the market takes a dip. If you put all your money into a single asset or industry, you're taking a big gamble, like betting on just one horse in a race. But by spreading your investments across different asset classes, industries, and even countries, you're playing it smart. It's like having a team of superheroes, each with special powers. But why does diversification work wonders during inflation? By diversifying, you're not putting all your trust in one asset that inflation could heavily impact. Instead, you're spreading your wealth across a mix of investments. Some might even thrive during inflationary periods. It's like having a balanced team, each equipped to tackle different challenges. While some industries suffer during inflation, others shine brightly, like beacons in the dark. By diversifying, you can ride the wave of opportunity. It's like having a pocket of magic beans that grow into fruitful investments. Buffett knows the power of diversification like the back of his hand. He's seen it work wonders in his investment journey. He said, "Diversification is a protection against ignorance." It makes very little sense for those who know what they're doing. So, spread your investments across stocks, bonds, real estate, and alternative assets like gold or silver. Explore different industries like technology, healthcare, and consumer goods. And don't forget about global diversification. Embrace opportunities in various countries. Focus on pricing power. It is the magical ability of particular industries or companies to raise prices without losing customers. It's like having a superhero cape that helps them combat the rising costs during periods of high inflation. Imagine being in an industry where your company can effortlessly adjust prices to keep up with inflation. It's like having an ace up your sleeve. So, which industries possess this awe-inspiring power? First up, we have the utility sector. You can't live without electricity, water, or gas. These essential services have an inelastic demand, meaning people will keep paying for them no matter what. That's why companies in the utilities sector often have robust pricing power, allowing them to raise rates and protect their profits during inflationary times. The consumer staples and energy sectors are also known for their pricing power. Whether it's a tasty snack or a gas tank, these products are considered necessities, making them less sensitive to price increases. That gives companies in these sectors the freedom to adjust prices and safeguard their bottom line. You might wonder, how can I tap into this pricing power phenomenon? Well, you can invest in companies that possess this superpower. Look for businesses with strong brand recognition, loyal customer bases, and a competitive edge. These factors often indicate their ability to adjust prices and maintain profitability in the face of inflation. So, next time you're evaluating potential investments, consider the power of pricing power. It's like having a shield to protect your portfolio from the evils of high inflation. Keep an eye out for industries and companies with this superpower. You'll be ready to weather the inflation storm with confidence. Dividend-paying stocks. These stocks not only offer you the potential for capital appreciation, but they also provide you with a steady income stream. You invest in a company that has been crushing it for years, delivering solid profits and growth. Now, here's the sweet part. As a shareholder, you become entitled to a portion of those profits as dividends. These regular cash payments shield against the erosive powers of inflation. When it comes to dividend investing, there's one name that's practically synonymous with success: Warren Buffett. Yep, the Oracle of Omaha himself knows a thing or two about dividend-paying stocks. Buffett's investments in dividend-paying companies are legendary. He understands the power of consistent income and boldly lets his money do the talking. Buffett's portfolio boasts a range of dividend darlings, from consumer goods giants to financial powerhouses. He knows that while others may get caught up in the market frenzy, dividends offer a clear and steady path to wealth accumulation. So consider the allure of dividend-paying stocks when inflation threatens to rain on your financial parade. They offer you a lifeline, a steady income stream that can weather the storm. Follow in the footsteps of Warren Buffett and let your money work for you. Recall his timeless words: buy when everyone else is selling and hold when everyone else is buying. Bonds and inflation-protected securities. What's the deal with these fixed income wonders? Well, let's unravel their role in an inflationary environment. Imagine you're holding a bond in your hands. It's like lending money to the government or a company. They promise to pay you back with interest. Sweet deal, right? But here's the twist. Inflation can erode the value of those interest payments. That's where inflation-protected securities come to the rescue. These intelligent investments are designed to adjust their value based on inflation rates. So as prices rise, your investments rise too. It's like staying one step ahead. But there are risks to consider. Even with this armor, you might encounter a few bumps. One risk is interest rate fluctuations. When interest rates rise, bond prices tend to fall. It's like a seesaw. You must steadily navigate those ups and downs. Another risk is market conditions. The value of bonds and inflation-protected securities can fluctuate depending on factors like supply and demand. It's like riding a roller coaster with unexpected twists and turns. However, by diversifying your bond portfolio, you can mitigate these risks. Spread your investments across various types of bonds, maturities, and issuers. It's like building a fortress with multiple defenses to weather any storm. So, when inflation strikes, don't panic. Bonds and inflation-protected securities can be your shield, offering stability and protection. Just stay vigilant, diversify wisely, and ride the waves of the market with confidence. We've covered a whirlwind of ideas on dealing with high inflation. From the ups and downs of the economy to Warren Buffett's sage advice, we've journeyed through it all. So, what's the key takeaway? Adapting your investment strategies during inflation is like surfing a wild wave. You must stay agile and ride it with finesse. Remember to hit that like button, share with your fellow adventurers, subscribe for more exciting content, and drop a comment below. Let's keep this conversation rolling. The adventure doesn't end here. If you're hungry for more tips and tricks to navigate the financial jungle, buckle up and join me in the following video.